Welcome to today's episode of the Making Money Personal podcast. Today, Terry and I will be talking about all things home equity with Triangle Credit Union mortgage originator, Ryan Campbell. If you own a home or if home ownership is on your list of goals, then this episode is for you.
You're listening to Triangle's Making Money Personal podcast, where we engage in real talk about financial matters that affect our community. Today's episode is sponsored by Triangle Credit Union, recently voted Best Credit Union in New Hampshire.
Welcome, everybody, and Happy New Year. We are super excited to kick off this new year with this episode. Home equity is something that isn't talked about enough, so today we're going to talk about it with Ryan Campbell. Ryan has been part of our mortgage origination team for a few years now, so I think he's going to be a fountain of information for you if you ever wondered about home equities and how you can use it to your advantage. Ryan, my man, welcome to the show.
Well, Terry, thank you guys for having me today. I'm pretty excited to be able to talk to you guys.
We're excited about having you here, Ryan.
No problem. Ryan, let's start off with the glaring question. What exactly is a HELOC or a home equity line of credit?
So in this industry, there is a lot of technical jargon. So HELOC basically stands for Home Equity Line of Credit. And basically what it is it is a line of credit that's secured by a piece of property. And Triangle has options where this can be added to a primary residence, a second home, a multifamily from 1 to 4 family, or an investment property. So you really have quite a few different options.
So just based on what you just defined, that Ryan, that has to be a property essentially that has to be that you own then, or that you're making payments on.
That's correct. Yeah, this would have to be on a property that you physically had ownership of. It couldn't be added to a rental property if you were just there as a renter.
Okay. Now here's a follow-up question to that, Ryan. Does it have to be in the state, or, if I had a second home in like North Carolina or something like that, how does that work?
Triangle's only licensed for these types of loans in the entire state of New Hampshire and the upper 4 counties of Massachusetts, which would be Franklin, Middlesex, Worcester, and Essex County. So the property would have to fall within that footprint for us to be able to do it.
Awesome. Ryan, how can I use a HELOC?
So the beauty of a HELOC is that it almost has unlimited uses. It's a great tool because we do them for people that are looking for debt consolidation, to cover education costs, upgrades or repairs to your home, could be used for auto repairs, or even something fun like a dream vacation. A lot of our members also just use them as safety nets. Think of it as like a spare tire on your car. No one's ever complained about having it when their tire goes flat. I'm a homeowner, and over the past 3 years, I have had a water heater and a furnace both go, and having something like this at your disposal means it's a quick and easy way to fix something and get you whole again.
Right. Now, Ryan, what's the difference between a home equity line of credit and a home improvement loan, for example?
So the home equity line is going to give you, out of all of them, the most versatility. And like we talked about before, the uses are almost unlimited. The home improvement loan is kind of more of a niche product. It has to be used only for home repairs. So in order to access the funds for this, you'd almost need to have a work order or an invoice for the work. But the benefit of this one over an equity line is not everybody has equity available. This one here doesn't require an appraisal, so you don't need any equity in the property. And the terms on the home improvement loan, they're going to be longer than a traditional, personal loan. And it's going to be better rates. So if you had to kind of compare it, it would basically be a personal loan with longer terms and better interest rates.
Got it. That makes sense.
So Ryan, just going back on that then, just for a point of clarification, when you open up a HELOC, do you have to have an appraisal done?
Yes. So you would need to have an appraisal completed on any equity lines or first mortgage products with Triangle.
Okay. As a homeowner, how much would I be eligible to borrow?
So if we're talking about the equity lines, you basically are going to be able to go up to 100% of the appraised value of the property. Now we have really 2 tiers of products. One is a more traditional equity line, which allows you to borrow up to 80%. And then we have one that goes over 80% that would allow you to go up to 100. Now, the main difference really just comes down to both products function the same way. It's just the one that goes to 100% has a slightly different interest rate.
Can you explain, can I borrow up to 100% value of my home?
So it's basically a combined loan to value. So if, let's just say you have an appraisal done on the property and the property comes in at $300,000, but you have a first mortgage of $200,000. That would mean you'd have about $100,000 of accessible equity in that property that could be taken out as an equity line.
Okay.
So the one interesting thing about the 100% equity line is it's not something that's that common. Most other financial institutions only offer equity lines typically around 75 to 80%. And so Triangle kind of has this as not an exclusive product, but a very unique product that allows you to gain access to 100% of your equity, allowing people to, get those dream kitchens without having to wait an extra 5 or 6 years to get the equity through just paying the mortgages down.
So Ryan, just as a follow-up then, quick question. For somebody who may have just purchased a home and hasn't built any equity, would that be a good, would 100% be a good product for them to look at then? Where they haven't started, maybe they haven't had a lot of mortgage payments and they don't have a lot of equity in their home yet.
Whenever it comes to this, it's always good to talk to one of us because there's a lot of different ways we can go with it. There is no right or wrong when it comes to, is an equity line right for a person? Everybody has different short and long-term goals. And as we talk to the members, it really allows us to kind of uncover what their needs are. And then that'll help us to focus them on what products are really right for them.
Okay.
So that's another great benefit of the equity lines. When you're talking personal loans, a lot of times they're much shorter terms. A home equity line gives you the ability to amortize your payments over up to 15 years. So depending on what you're using, it gets to stretch it out a little bit further, making it a little bit easier to make the monthly payment.
Got it. Okay. That makes sense. And with that said, we'll be right back after a word from our sponsor.
Pay people in a snap using Pop Money with Triangle's mobile or online banking. Need to reimburse someone for lunch or pay them back for something they bought for you? With Pop Money, there's no need to write a check or find an ATM for cash. All you need is a Triangle checking account and TCU online or mobile banking to try it out. Setting it up is easy, and when you're ready to pay, all you need is the recipient's email or mobile number. Don't bother with the hassle of setting up other digital payment accounts when you have Pop Money. Try it out today for a convenient way to pay others or request a payment securely and easily. Visit trianglecu.org to get started.
So Ryan, how many times, can I use a HELOC more than once? Is it always there? Does it close after a while? And how does the payment work? How do I pay for it every month? Or is it weekly, monthly? How does that work exactly?
So we got a couple different options. So if you go with the home equity line of credit, it's one of our more popular products because of the flexibility. So a home equity line of credit, if you go with our variable rate, is going to give you a 10-year active draw period. So throughout that 10 years, you can use it, pay it off, and use it as much as you need. The loan will amortize out over 15 years. And then at the end of the draw period, because you could be using this nonstop, you could come in the day before it expires and use it all again. You could have up to another 15 years after that. So a standard equity line of credit, you could have it depending on how it's managed for up to 25 years, but only 10 of it would be during the active draw period. One of the things that the equity line of credit comes with is we have two options. You have a fixed rate and a variable rate. The variable rate gives you the most flexibility with the 10-year draw period. If you're not somebody that likes a variable rate, we also have a fixed rate option. But by going with the fixed rate, you do sacrifice a little flexibility. You won't have a 10-year draw period with that one. You'd only have a 5-year. So you still get a lot of the same benefits, but without having to worry about any rate changes.
Okay, so I guess my follow-up question to that, and actually it sounds like you've already answered the question, Ryan, but I just want to confirm that So if I had a variable rate, then obviously my interest rate's going to change over time.
Yeah, that's correct. So our equity lines are tied to the federal prime rate, and they are subject to adjustment twice a year. So January and July are your magic months. If the Federal Reserve raises prime when you would hit one of those, your rate would adjust with us.
So if I have my first mortgage with a different financial institution, can I apply for a home equity line of credit with Triangle Credit Union?
Absolutely. The only requirement is that you just have to have equity in the property. So if your mortgage is with us already, or whether it's elsewhere, it would work. And with an equity line, a lot of people always associate them with a second lien position, but an equity line can be added if you have an existing mortgage, or if you have the property paid off and you're just looking for a way to borrow money against the property. You could do it without having a first mortgage.
Right. Now, Ryan, what if you have more than one property? If you have, a couple rentals or whatever, is it possible to get one home equity line of credit for all of those properties, or would you have to get one equity line of credit for each property?
So you'd have to have it, each equity line, the collateral behind it is the property itself. Now, if you had one on one residence, the money that you can use for it could be used for repairs on the other one. But if you did want equity lines attached to every property, you would have to apply separately, and they would all be individual loans.
All right. So, and I guess we're kind of wrapping up here, but I do think that it's important. And again, I'm saying this more for just my own confirmation, but when you open up a home equity line of credit, there are a lot of different uses for it. So you could use it for home improvements. Maybe you're going to be doing a new bathroom or a new kitchen, but you can also you can use it for tuition, for college tuition. And I think you had mentioned the dream vacation. You could use it for debt consolidation. So I think that's, that just kind of blows my mind that you can use your home and the value that you have in your home as a financial resource. And, it's available to you.
Yeah. And because, typically homes have so much more value, you're going to get much more competitive interest rates. A lot of times with credit cards, you're talking double-digit interest rates, and consolidating everything here would drastically reduce it and potentially even increase your cash flow as far as what your monthly overall payments would be for those loans. And one thing that people get nervous of is, is there a prepayment penalty? And there isn't. So you could pay this off as quickly as you wanted, and then once it's paid off, if you paid off all your debt in 1 year, you'd still have 9 years with that money available, where if an emergency came up the year after, you wouldn't have to rush out and reapply for a loan. The funds would just be sitting there waiting for you.
Okay. That certainly brings some peace of mind.
It does. And I think, we're in very uncertain times. A lot of people are nervous about, the future. And this is a great way to kind of secure that and help you sleep at night.
Good point.
And now I know we talked a lot about the equity lines, but sometimes that's not the perfect fit for everyone. We do offer a home equity loan. Now, the main difference is that when there's more of a one-time, the equity lines are great for, multiple or reoccurring expenses. But if somebody had a very, like a one-time expense that they knew they needed the money for, and they didn't like the idea of the line of credit, we do have a home equity loan where they would have a very specific dollar amount. We would give them that dollar amount on it, whatever term they wanted, and then they would just pay it back over that term without the ability to go back in and reuse it.
Okay, that's a good option,
I think if you're interested in any of our products, whether it's a home equity line of credit, a home equity loan, home improvement loan, or a personal loan, getting the application started obviously gives us a lot of the information that we need to be able to determine, one, which products you're eligible for, and also which products would kind of be the best fit to help narrow it down. But if somebody just has questions, I always recommend giving us a call. We'd be able to go over all the options. They can tell us what their short and long-term goals are, and that's going to help us to try to get them the information they need to make a good decision on what product's the best fit for them. I also don't want to forget to mention that, Triangle's always looking for ways to give back to our members and help them save money. And the way we do this is by offering a lot of really great specials and promotions. If anyone's interested, I would definitely encourage them to check out our website, and that way they can get the most up-to-date information on all the specials that we're running.
Ryan, thank you so much for joining us today. You were fantastic. Before you head off, can you let the audience know how they can get in touch?
Yeah, if any of our members have any questions or want to get in contact with us, the best way would be probably to go on to Triangle's main website. And in the top right-hand corner, there is a link that leads you right to our mortgage page. On that page, it has ways to contact us, along with all the information about all the different mortgage products that Triangle offers.
Awesome. So be sure to get in touch with Ryan regarding all your home ownership questions. And thank you for listening to today's episode. Be sure to share it if you found this information helpful. And if you want to be a rock star, rate us and review us on Apple Podcasts. That helps us so much. If you have a topic that you'd like us to discuss, email us at tcupodcast@trianglecu.org. Until next time, everybody, take care.